Good afternoon, everyone. Welcome to our webinar this morning, or this afternoon, I should say, Navigating Compliance in the Aerospace and Defense Industry, Leveraging Technology. Today, we've got two great speakers, Karen Delgado and Bob Stebbings. They'll walk you through a number of examples along with the solution that is now in market. So with that, I'm going to turn the floor over to Karen Delgado. Thank you, Karen.
Thank you, Bob. And thank you, everybody, for joining us this morning or afternoon, depending on where you're located. Really appreciate you spending some time here with us to learn about Kinetic and our Cre8tive solution. So as Bob said, we're going to be addressing today, this is our topic, government defense contract accounting. We've had a previous episode. Hope you had a chance to attend that. It's also available in our socials, but let's dive right in. We're going to kick off here, just understanding a little bit of the objectives of today's webinar. So first of all, discuss a little bit about the system compliance with the Defense Contract Audit Agency requirements as it relates to your accounting system in the Kinetic ERP solution, supported by some of the Cre8tive Technology and Design expertise and actual functionality that has been enhanced to address those needs. And part of today is to put a name to those challenges and those needs. So we're going to identify those as we've seen it and experienced them with our users in the industry. So we're going to talk about what we have heard and addressed and how we have put together solutions, based on system configuration, best practices, and again, features that are specifically configured to address the needs of this highly compliant industry that we're going to be working under. So with that said, just some general safe harbor statements that we are going to be presenting here. And now getting right into the content and diving in. So for government defense contract accounting. So the first thing to just kind of get a sense on, and I'm sure everybody is familiar, the DCAA Compliance, again, the Defense Contract Audit Agency. So when we are contractors and we enter into agreements to provide goods and services with the government, we must follow through the guidance and regulations of the agency. So there are audit processes that we go through, usually supported by third parties, by independent professionals that review the representations, the financial representations of the data that you make as defense contractors. So then our goal is to make that audit process more transparent by providing you with the data that it's easily traceable and you can easily identify that it's allowable and it's allocated to the right cost objectives, and then that it's reasonable and compliant with your contract. So that's part of the requirement that drives the need. And there's a checklist that has been published by the agency to assure the compliance of your accounting system. So of course, it first and foremost needs to be GAAP compliant. It needs to allow for the proper cost segregation of the indirect versus direct costs. It also must prove accumulation of cost by contract to the intermediate and final cost objectives. So very clear traceability of where those actuals are being pointed to. And we also must comply with a protected and auditable timekeeping system, both from the shop floor and from any office users, such as designers, engineers that may be working in the execution of these contracts. So from a high level, these are some of the checklist items that our application meets. And, getting that out of the way then allows us to go into the more specifics of the challenges that an ERP usually presents when going through that audit process and being compliant and proving that to your auditors. So we're going to go through this list where we've identified some of the common challenges in government contract accounting. So first of all, the cost traceability to the contract. So being able to easily identify where those actuals are coming from and how they're rolling up to the specific cost objectives. So we're going to see how that gets addressed using Kinetic ERP. Also supporting the revenue recognition processes to be compliant with the 606 standards based on percentage of completion, and again, being able to prove out the details that are feeding that process. Also, the ability to support multiple billing methodologies, and that's across different contracts or also within the same contract through milestone billing, progress-based billing, time and materials, cost plus. So we're going to see how our application helps achieve that. Also, from a performance reporting standpoint, tracking earned value management concepts such as schedule performance index, cost performance index, how can the system help us easily provide those metrics? Same time, being able to report on accurate labor rates. So not only the rate associated to the employee that is working on the project, but also making sure that it is related to the hours worked, right? We don't want to overbill our customer, which in this case is the government. So having processes in place that help us recalculate that to make sure that we are compliant, we will show you how that can be achieved. Also, the ability to differentiate between allowable and non-allowable expenses or costs against the project, another critical element of being compliant with a government contract. So the traceability, the ease of identification, we're going to show how our end users, as they're collecting those costs, can help us identify that and also prove out to our auditors how we are categorizing that all the way down to the general ledger level. Generating our incurred cost electronic report. So our ICE template that I'm sure everybody is familiar with and everybody is generating somehow, usually a very menial task that has to be put together manually. We want to make sure we provide you with some tools to help streamline that so that the data that feeds the report is coming straight from your application. Also managing different burden categories, having the proper classifications, and then also making sure that we can calculate the right burden amounts, going from a provisional rate to truing up and performing any adjustments that are necessary to our projects. We'll talk about some of the solutions that are in place to help manage that. Also, recognizing revenue to long-term agreements. So this is more for those types of contracts where we have physical deliverables, shipped pieces that represent long-term contracts where we are not recognizing revenue necessarily just in a percentage of completion, but down to the pieces that are being produced, that have been completed, that have gone out the door to the customer. So we will address how we can achieve that as well, and also incorporating labor entry controls for government contracts. So not just anyone can edit a timesheet, and how we can prove to our auditors that the right controls and gatekeeps are in check. So we're going to talk about these 10. We want to keep it a little bit focused for today. So we are going to move on and show you some of the solutions that are available. So this, of course, is going to be supported by Kinetic ERP, which is the application that we're all here for, and also some of the functionality that we put together as part of our compliance efforts here at Cre8tive Technology and Design. As some of you may well know, and from our previous episodes, we have incorporated some contract flow down details, some other traceability solutions and certifications that we can generate to support the operation of the business. So today is being focused more on the accounting side. So this is just kind of high level, some of the solutions we're going to talk about next to address the challenges that we just discussed. We're going to start off here by our traceability of cost to the contract. So Kinetic ERP and its project management solution allows for all the related cost to a contract to flow from timesheets coming from the office and also from the shop floor. Also, any purchases that are being done in relation to a project. Those could be material purchases, could also be for services, any outside process work or subcontract activities. So all of those we have the ability to associate to a specific phase and to the overall project. Expenses, the ability to submit expense reports from the field, even if we're traveling in service of a contract and we want to be able to collect those other direct costs. Also from any miscellaneous AP activities, any invoices for any services that are not necessarily tied to a purchase order, we can direct to the cost of a project. So again, this is supported by the project management module. So we're going to leave our slides here for a second. We're going to go into our Kinetic ERP solution. So right here, we are in our homepage, and we're just talking about project management. So I'll bring up one of my projects here, and we'll just retrieve the first one off the list. I know we have a very varied audience, so not all of you may be familiar with the project management functionality in Kinetic, but it is truly that. It is the concept of establishing that top level project concept, and then the breakdown of the work, of the phases of what we're going to be executing in service of that project. So this could be a combination of non-production activities such as design, engineering, and of course, also production-related activities, which is the great differentiator from our application, right? The ability to mix both project-based work and manufacturing work into a single solution. So right here, we have a very simple project identified. You have the ability to also establish sub-phases to a phase. So if you need to break down the work even further in additional categories, we have an example here of 2 branches of engineering that will also feed all the way to the top engineering phase. So these can have a direct relationship to the contract, right? We have the ability to relate our project to what is commonly known in the system as an order, which would be the representation of our customer contract as it is received, with the different contract lines, the different objectives, of course, with the contract value associated to each of them. So one common practice or best practice potentially could be to structure a project so that it matches that that same contract line structure. That doesn't necessarily mean that's the only way to do it, but it does provide very good clarity for the cost objectives, right? So as we are incurring costs associated to the design effort, we can tie our contract line specifically to that phase, while still having the ability to further break it down in other subcategories if necessary. So that's just an example of how we can tie those two together in a very clear way. Each of these phases, you have the ability to establish estimates or budgets based on the hours that are expected, also on materials, specifically anything that relates to manufacturing efforts. You can associate a manufacturing job to a project phase, which will then roll up all the bill of materials information, all the labor associated to the routing details of things that are going to go through the floor. They can be collected against that specific phase. So this is how we relate it all. All these costs will then roll up to the very top of our project in all their different categories. So you can see we have it broken down by labor, burden, subcontract, your material costs, potentially any material burden factors that you may have built in there, and your other direct costs for any miscellaneous expenses or expense reports, examples we talked about. And you have your estimated column. That will be the representation of your estimated at completion, which will then we can compare against our actuals. This same type of cost breakdown is available at the phase level, which will allow you to measure that performance and analyze that performance at any level of the project. And also, to have those cost details easily traceable to every particular section of the project overall. So again, Kinetic allows for this through our project management application. Now, to get into the more transactional detail as a project manager, you have dashboards available to you where you can get a summary of those costs at the project level. So similar to that project cost screen we were just on, we can now see these represented here for multiple projects that we may be managing. And we can take that data and then analyze it from, whatever function or perspective we want, right? So we want to see, are we performing positively or negatively against our estimate? We can see the total of the actual cost incurred so far. We can see cost to complete. So all the general metrics that you normally would be on the lookout for as a project manager, you can see in our summarized dashboards view, and also get transactional details, right? Whether we're looking at operation type information, but more specifically on the accounting side, if we're going through an audit, looking at the labor associated with the project. We can get all the way down to the originating timesheets of who's worked on it, how many hours, down to the very specific task that they're reporting against. So all this transactional information will help with our audit processes, right? As we're looking at that cost traceability, we can see exactly where those costs come from. We can see expense reports associated to that. We can see the purchase orders and drill down to those originating transactions. So we really provide you with all the tools and the power to enable that audit process, right? And really show your auditors that everything is being collected in the same system and everything is fully traceable. So that kind of addresses that first challenge there. If we continue through our content, we also dive into the revenue recognition, right? And supporting 606 standards. So with the information that we just walked through, right? The ability to collect estimates and actuals to the overall project or to the individual phases, it also provides the ease of the revenue to be recognized. And revenue recognition can happen through different methodologies, right? It could happen on invoice if that's, how you want to define it as part of your contract configuration, or it could also be something that you do kind of more of an ad hoc basis based on percentage of completion, cost to cost methodology, or maybe just a manual calculation that you want to define based on your own, revenue recognition requirements. Most commonly, what we see in the industry is that percentage of completion based. So for that, we're going to go back to the project we were on, and we're just going to walk through that simple example where we have some actuals already collected. You can see your actual cost here. That's rolled up from all the activities we've done. We have our estimate at completion information. If we navigate to our revenue recognition screen, we'll have the ability to see anything that has been recognized to date. So you can see those numbers and the cost to be recognized in the next round. So this is the actuals incurred after the last time that we recognized revenue. So if we notice, this would be the sum of our total actuals in the project so far. So these totals are being compared to our estimate, and that's how the system comes up with that percentage of completion, whatever that is. And it will help us calculate the value to recognize. So here we have different methodologies that we can use to calculate that, but if we're doing it based on the estimated at completion, we can choose that and run our calculation, and that'll tell us how much revenue we can recognize based on these new actual costs incurred. So that calculation is done by the system, right? It's not something that we have to, keep track of and calculate offline. It's supported just by the standard functionality in our application. And this same process, if you choose to recognize revenue at the phase level, can happen at those specific subsections of your project. So that is a choice you define at time of project creation, where the revenue recognition will take place, and you have that choice here. And then the process, instead of happening kind of at the very top of the project, would have the ability to be processed at the phase level. Now, part of our support of this revenue recognition process, we've added the option to kind of do it more in bulk and having visibility to multiple projects at once. The example I just walked you through was just for this specific ADD 100 project, but we do have our revenue recognition dashboard where we can choose multiple projects at once, however many we want. We can, run it based on a filter, and it gives you that visibility to the project numbers. We have quite a bit of information here. We can always expand the size of our labels here, but you have your estimated revenue, your budgets, your estimates, all of that pretty much kind of at a summary level. And then you can do that same calculation we did, but for multiple projects at once. You can have different methods to calculation of each and every one of the projects here, but it just allows it to do it kind of in a more massive way instead of having to do it on an individual project basis, while still having visibility to all the details on the numbers that are calculating. And then of course the actual recognition, saving and posting process can also happen through here, so that the system can generate those revenue entries. So just an alternative of how we can run a revenue recognition process, especially once you have that comfort level in the system and the calculations that it can generate. So that addresses our second challenge right there. So going back here to our presentation, the support of multiple billing methods. So that's another, a standard functionality piece of our project billing module. So we support milestone-based, fixed fee, time and materials, and cost plus, amongst several others. Similar to the revenue recognition, we can define the invoicing method at either the top of the project or at the individual phases. So you have the flexibility where you have contracts where you may have mixed terms to define that at the specific phase. If we also go back here to our project example, we can go back to our homepage. You'll see that in our project entry properties, let's pull up our ADD 100. There are the contract level, have the options to choose from. Based on the option you choose, additional configuration will take place, right? So if we choose milestone billing, then we go through the definition of the milestones that our contract calls for, whether it's specific deliverables, specific completions of certain tasks or, work levels. You associate the amount that is going to be billed based on the milestone being achieved. And then these milestones will flow to our AR team in our AR module, so the proper invoices are generated. So milestone driven requires milestone configuration. For the other methodologies we have there, such as time and materials and cost plus, we have additional attributes that can be defined. So I'm going to pick up another project here. We can do, let's see, let's pull up this cost plus project. And at the contract level, we'll have those additional invoicing parameters to define. So if we're talking about cost plus, of course, we have the option there to define markups, if markups are going to be applicable for the plus side of it. We also have the ability to define what we call burden sets. So this is from the billable perspective, right? Especially for time and materials and cost plus, that's where it might be applicable, where you need to define provisional rates for how you're going to bill for that burden. So you can configure these in your system. So I'm going to drill down here so you can see a little bit under the hood. But there you can define the different types of burden that are going to be incurred and that you want to incorporate as part of your billing process, and what costs that burden will be applied to with different categories, if it's applicable to labor, materials, subcontract, etc. So if we look at any of these here, fringe, for example, you can see what the provisional rate for that will be. This case would be 5%. You can have multiple rates here, with different effectivity dates, especially if it's a long-term type contract. So this is what the system will look at when we associate that burden set to the contract definition. When we're going through our invoicing and billing process, it'll calculate the burden to charge based on those provisional rates. Eventually, the end of the year or when the time comes, there can be a true-up process where we can, come up with the actual burden rates, and then support with the calculation of that true-up and any adjustments that need to be applied. And of course, if we need to generate any additional billing for any, additional true-up values that we didn't include as part of our provisional rates calculation. But again, going back to the configuration of the project itself, these are some of the basic elements for time and materials and cost plus. You also have a section where you can define billable labor rates for different roles. There's a hierarchy of the different spots where role rates can be defined. It can be a standard applicable rate for the role, regardless of the project. We also have rate definition at the specific employee level, or the more specific one and very commonly used for government-based contracts is defining those rates at the project itself, right? So this is the charge rate for our production engineer type of role, whatever that is, $25, $10, you can define that. And it can be also associated to a time type. So if you have regular time versus overtime, and an effectivity period for the rate, right? Again, if that's bound to change through the life of the project. So just some of the things that we can establish there. And the system, again, supporting those different billing methodologies. Now, going back to our presentation here and addressing some of the other challenges, we talked about collecting the estimates, collecting the actuals. So all of that information also supports concepts of earned value management. So through some of our dashboards, we can look at some of the basic elements there, like our cost performance index. So the system can provide the capability of those calculations. We can go in and look at that example here. I'll pull up my dashboard here, and we can use our ADD 100 project as well. So if we look at our CPI section, we already have a phase here that has been 100% completed. We have a couple more phases there with some partial percentages of completion. What all the system is doing here is doing that math for us, right? We know what the planned cost was for those activities. Based on the percent of the work that we've done so far, this is what we should have incurred in, and then it's comparing that to our actual. So that's how it's coming up with that performance factor. So of course, on our first phase there, we did quite well. We came under our expected plan costs. So it's just, again, the system supporting some of those calculations there just by utilizing those dashboard and reporting tools, and the fact that we are, collecting the right information. Another one of our challenges here.
Karen?
Oh, yeah, go ahead.
Sorry to interrupt, but people are saying that their screens are frozen. They're not following your what you're showing on the screen.
Oh, okay. I can try resetting and sharing. Is that true for YouTube, Bob, or is it just for certain audience members?
I think it's for everybody.
Okay, so let's see. I'll just reset and start resharing. Okay, so you should see my mouse circling right now.
I'm seeing it now, yeah.
Okay.
Thank you.
And how long ago did that happen? Sorry, guys, the technical difficulties we can't control.
I started seeing things come in at 126 when you were showing the dashboard.
Okay. All right. So I'll just revisit this real quick here. So yeah, we were talking about the cost performance index. So this is what I was addressing there in my description, just the ability to see the expected or planned cost for each of the phases, and then calculate based on the percentage of completion what we're supposed to have incurred, right, based on that progress. And then that's just comparing against the actual so far to come up with these numbers. So just another example of the system's reporting capabilities in supporting specific earned value management concepts. All right, so we'll go back here to the presentation. So this is what I was just kind of diving into next, supporting our allowable versus non-allowable cost. And that is all part of the system configuration, right? Being able to support the identification of those different categories. So for example, right here we have just a quick screenshot of how we set up miscellaneous type charge categories that can then be used at time of expense reporting. We can pull it up in the system so you can see it up close. So we'll just look up for our miscellaneous charge code. There we go. And when we're setting up these different categories, this is what our users will be able to choose from, right? When they're capturing those expenses, we can incorporate in the description just for easier selection which ones are considered allowable, non-allowable. This is just essentially a choice I made here for the presentation purposes. But when we're setting these categories up, there is a GL control that we can associate to those categories, which we can then point to a specific either allowable or non-allowable account. So this is going to be important on the general ledger side as part of that configuration, so that when we're pulling this information to our incurred cost reporting, we can point it to specific categories or specific accounts so that we can make sure we're only pulling in allowable expenses. So it's another way to kind of prove out through that audit process that there are mechanisms to control that and manage that, and also to guarantee that only the appropriate categories are used in our reports. So again, just part of the system configuration that is just already looking into that. And with that said, we also have come up with some solutions to help with that report creation. So I was just referencing here a few minutes ago the incurred cost report, and this is just a template that everybody is probably familiar with on the call. This is a template published by the agency, by the government, and it's usually in most systems, it's more of a manual exercise, or mostly a manual exercise, where we're downloading information from the accounting system, filling out certain tabs, and generating that report. So what we've put together is a solution to help streamline that process and streamline that creation of the report by downloading the accounting data directly from Kinetic ERP, and we're using a solution called Fast Close. So for this, I'm going to show you a quick example. Let me bring up my template here, which I'm sure this is familiar to everyone. So this is, again, standard format, comes with the instructions, the government's putting it all together. So there's certain tabs that you already know you'll fill out, like your company information, just general questions. But what we want to show you here is, and I'll scroll a little bit here to the right side. You are probably already familiar with a lot of these. You have to usually fill out your expenses, your contract costs. So all of those tabs where you see an FC kind of prefix there means that we've already put together a report to extract that information from the application. So right here I'm positioned in my FC expenses section. So if I just choose to run this, it is retrieving, those balances from the application. And then, of course, this has the ability to then copy this information to any other tabs where those raw data elements can be used. But yeah, this is something that usually would have to be populated manually or through multiple Excel lookups. Now we have the ability to connect that, and we've already done that for several of these options here. You can see it now calculated for the basis, and if I continue to scroll to the right, you'll see some different examples there. So of course, this goes hand in hand with your system configuration. So through the proper categorization in the different accounts that we set up and the different segments, all of that is going to help support this, right? So it's not only having the right technology to help extract this information, it's also having the right configuration. And that's where some of the expertise comes in, right? In helping you define your general ledger so that it supports the way that the reporting needs to be generated. So that's just a quick sample of that. Again, it's going to help streamline the creation of the report. And I'm sure it's going to be something of interest in the audience. So that's another one of the common challenges that we have there. Let me go back here to my presentation, keep moving. And the next one here is related to the labor entry controls for government contracts. So part of the Defense Contract Audit Agency rules is to have limitations or gatekeeps on who can modify timesheets, right? Once the time record has been entered, it can't just be, modified randomly, right? Especially, we need to have clear traceability and auditability of why changes happen, why corrections need to take place. So we've added some controls, first of all, to protect who can input timesheets, right? And that's based on the user that is going to be logged in. We have those security elements implemented. If we're allowing the supervisor to retrieve and edit certain timesheets, they won't just be able to, input a change. Those changes will be communicated to the timesheet owner, and then the owner has to acknowledge those updates, provide a reason for the update that is properly documented, and then approve it. So it's all going to be then compiled in an audit log, essentially, to every single one of the timesheets, so we can prove to our auditors that those entries are being protected, and the proper notifications are going out to the right owners. So that's happening for both the time entry module, which is again meant for more office users like your engineers, your designers, and it's also enforced at data collection, right? So if you choose to incorporate that, it will also notify users when they come into data collection if any one of their timesheets have been updated or are modifications have been suggested. So the operators can actually also review those updates and acknowledge them and accept them. So it's going to be a slide out that comes out whenever the time entry screen is opened by the end user. So just some protections there. So yeah, so that covers that portion. Something else that relates to the time entry is the labor rate recalculations. So this is for exempt employees, right? We've incorporated a process that helps recalculate that labor rate based on the actual hours worked during the pay period. So there's definitely some configuration that you'll put together as far as what your pay period duration is. At the employee, we also define, what their default hours per week are, and whether they are employees that will be considered as part of this process. So if we look at an example, and I'll just minimize our as report here, we can pull up our time entry screen, and I'll just show you the screenshot of that. Let's go to, time entry. There we go. And I'll just go here back to September 2025. I have some entries that have already recalculated. Let's do, let's do 2025, and I want my end date. Just go back to, okay, so we have some entries here in September. So how this process works based on the configuration is that we define the pay period, right? So whether it's weekly, bi-weekly, you establish that in your system setup. But if we look at, for example, September 23rd, these are some of the details of what I worked on. So I worked on this particular job, and I worked this many hours on that, 11 hours. So for the pay period, if I've exceeded my standard working hours, let's say there were 40 and I worked 45, you're going to have a process that you'll run, at a particular time of your choice, and it'll go back and essentially evaluate all your labor entries for that period. And if adjustment is necessary, it will go in and update your labor rate so it can distribute that cost across the actual hours worked. So in this case, you can see that the original labor rate for this employee was $17. That's, their standard rate. But, back in September, we ran a recalculation, and it recalculated to what we see right here, which is $12.06. So this helps us, assure that the right rates are being utilized to charge to our government contracts, and to make sure we're not overstating those rates for the government. And it's all auditable. We have the ability to run a dashboard to see all the adjustments that were made for the pay period. So if you need to provide, that as part of your audit process, the changes that happen, it's very well documented, when the change took place, and if it was ever recalculated for any reason, you'd be able to see the last timestamp of that update. So just a way to eliminate another manual process that would have to take place in the system. All right, so that covers a couple of our labor entry controls. Now, other elements here that we've incorporated to support some of the challenges, we have one other revenue recognition process that we've incorporated, and this is for long-term contracts that are more for shipped units, right? So we've talked about revenue recognition for, just standard situations where we have, a mix of, deferred revenue type examples, when we're doing either milestone-based billing or time and materials, cost plus, where we want to have that calculation based on estimated at completion. But this one is just different, right? Because it's more based on the units being completed, on the units being shipped out, and where we are in the progress based on units. So we put together this dashboard essentially that can help us oversee that. So let me bring up my example over here. So first of all, I have multiple projects that are long-term contracts. And you can see here at the very top, there's some high-level numbers of the revenue that was bid as part of the quoting process, the order revenue. So that's the total value of the contract essentially. And you can see some of the different figures there on the cost as well. So not super different from the examples that we've seen, but really where things change are down here in the project details, where now we have that broken out with all these different factors, right? It's very quantity based. So originally, this is the pieces that we quoted as part of that bid process, and it has all the calculations of the hours associated to those units, the weighted average unit price for those, the labor cost per hour. So I won't describe every single one of these rows, but you can see kind of the level of detail that it goes through in calculating that, and of course the total expected revenue. Now, the columns to the right are calculating all these categories, but now based on the status of the pieces, right? So these are pieces that we've already invoiced for. So it can tell us right now what the total revenue associated with that would be, the total cost that we've incurred based on the actuals that have been reported against that. We also can differentiate to just completed pieces based on, the fact that the last operation has been completed, but we haven't shipped or invoiced the units. And then using all those factors, we also can come up with the estimated cost to complete. So this definitely, has a lot of detail to describe, but we just wanted to give you kind of a quick flavor of what we put together for these long-term contracts when it's very kind of units based, providing you with all those figures so you can come up with your estimated revenue to recognize based on the unit factors. So yeah, and of course, based on that, you can run the calculation, and then of course, if you agree with the calculation that the system comes up with, you can also process the revenue recognition, so it does the entries against the project. So this again definitely would require a very in-depth session to describe everything that it's doing. So if there's any interest in that, please feel free to reach out to us, and we'd be glad to discuss more of what this solution accomplishes. Now, I think the last piece and the last challenge to address here is the managing of burden. So for this, we have more of just an example to talk about here, but the common challenge we see in government contract accounting relates to, the burden rate calculations, right? We'll usually, establish those provisional rates, could be at the beginning of the year, a particular moment, and, we use that to to run our projects until we get to a point where we come up with the actual burdens, and we have to go through a true-up calculation. So for this, I'll let Bob Stebbings kind of chime in a little bit on describing how this process works, but the intention is that it will help streamline that true-up calculation and help streamline any adjustments that would need to happen to your project. So Bob, I don't know if you want to chime in here a little bit and describe kind of the thought process behind this.
Sure. So what we've done is allow you to associate accounts to burden pools and differentiate between the direct costs and indirect costs. And then we allow you to calculate the provisional rates. The column that you see with the highlighted values called rate, those are the rates that you would put into the burden sets to show it on an invoice, and then to collect the provisional allocated burden. We only have one place that we can do that in Epicor. So we calculate a wrap rate for each overhead and the material. We associate the employees to those wrap rates. And then collect burden basically, or associate burden for every activity that happens on a job based on those rates. Then those rates are all calculated based on the budgets in those accounts. And then after a while, we are providing the opportunity to review the same thing, but using the actual values, the actual balances in each of those accounts to come up with what the actual rates are. And then again, what the actual provisional rates are. And then we optionally give you the ability to do a true up anytime during the year, but of course everybody has to do it before the end of the year or at the end of the year. So we provide the ability to actually go back and adjust the burden that was applied on every job in the system. And so that makes the applied burden match exactly what all those burden accounts, those expense accounts totaled for the year. And so we can prove to the government that we've taken every cost into consideration when we set the rates. And then you can use standard Epicor functionality to do a true up invoice for any projects that are cost plus or time and material where you have the need to actually run an invoice for that. You could do it for other types of projects as well, but those two are the ones that we see most often.
Thank you, Bob. So yeah, and that would address that, and I would say this is probably one that we hear very commonly, and through either our pre-sales process and through implementation. So it's really to Bob's point, a combination of system configuration, as with pretty much everything that we've discussed. It's system configuration combined with some of the tool sets that we've put together as part of Cre8tive Solutions. So with that said, I'll open it up to the Q&A section, and I don't know if Mary Chris, have you seen any questions come through? Let me
We do
see.
have one. Yeah, we do have one from Davina Oakland. Do you want to field this one? I can read it to you.
Sure. Okay.
So she's saying that, and it came at some point during the earlier part of the does Epicor already have all this functionality, or is this what your company would integrate or reconfigure into the existing system or outside the system? So this is someone who's new to Epicor.
Oh, okay, great question, and I can take that, Mary Chris. So yeah, so what we've gone through so far, it's actually a combination of both, right? Some of these is standard Epicor functionality, and some of these solutions are either specific best practices or enhancements that the Cre8tive team has put together. As to the detail of the breakout in the presentation, I usually have our logo kind of on things that call out specific Cre8tive functionality. But if you want to kind of have a detailed breakout of that, you can reach out directly to Mary Chris. I'll have her contact information in a slide here at the end if you want to kind of have a more detailed breakout clarity on that. But it's a combination of both. And we also have a question coming here: when or where this recording will be made available. So this will be published to our YouTube channel. So we'll make sure that everybody gets information on that as a follow-up. And as far as the timing on that, it'll probably be in a few days. I don't know, Mary Chris, usually how long that takes to be published.
Yeah, a few days is a good estimate. Another question's popped in. What is the best process to transfer ownership of the previously purchased and received raw materials after the government has reimbursed the manufacturing company per the contract?
All right, so I think for that one, we might want to address that in a specific conversation, because best practice, we have some recommendations on whether we want to allow that, and if we allow it, what the best way to do that would be. So I can't see where that question came from, but whoever you are, please feel free to reach out to Mary Chris after, so she can put you in touch with our team on how to do that. I don't know, Bob, if you want to add anything to that.
No, I think that's the best bet. It's very individual.
Will do. Thank you. That's all the questions we have right now.
All right, so let's see. Well, I do want to take the opportunity here before we wrap up to talk about our upcoming event. So we do have another webinar coming up here on March the 24th. And this is also related to government contracting, and it's focused around the compliance roadmap. We'll be glad to share more information kind of on the objectives of the webinar, but it's essentially kind of recommendations where you know, the requirements are going and how to better prepare for that. So please stay tuned for it. And if you need any more information around this upcoming webinar or anything we presented today to the questions that came in, that would be glad to follow up in a more individual basis, you can reach out to Mary Chris. We have her email up in the screen right now, and she'll make sure to, you know, send that over to the right resources in our team. But other than that, Mary Chris, anything you'd like to add before we wrap up?
Nothing, Jermaine. I just want to thank everybody for their time today, and please let us know how we can help you in your business.